How's it going out there? Everybody live? Everybody good? Number one, what is Wyckoff? Why do I keep talking about this? Well, good question. Wyckoff is a gentleman, old Dick Wyckoff, who back in the 20s, he wanted to know, how do institutions who have more money than God trade in markets with like you and me and our friends and our neighbors and our moms and our dads? How are they? Because we're spending at, let's say, $1,000 in a market where they're spending like trillions in some cases. How is that even comparable? Well, what he discovered was, oh, they have to layer in or layer out in a bunch of different ways. And one of the ways they do that is literally this. Now, volume's important. Volume is not on this particular schematic, but this in particular is very, very interesting. Okay, so Wyckoff, back in the 20s, looked at how whales enter and exit stock markets, and really he discovered that it's kind of all the same way. So one of the first things he picked up on is how they enter a market. They enter a market through what we call accumulation. This is what he calls accumulation, and we call it that as well. So where have we seen accumulation? Well, if we go back to 2015 is the last time we saw super clean accumulation. So what accumulation is as follows: big nasty downtrend that scares everybody out of their positions, and then a period of essentially sideways. There's a trade range and price kind of bounces around in the trade range. Okay, big sweaty downtrend, trade range, bounce before leaving the trade range. There's often a spring, which is a brand new low that's like shaking out the very last supply that possibly can be shaken out, and then an immediate retrace, consolidation above the trade range, and then off we go. Okay, so that's what we wanted to look for. So bounce, coming down from a downtrend, spending time in a trade range, big sweaty sell-off, a spring, followed by an immediate retrace with consolidation, right? Consolidation is key. That is how the markets are. Everyone knows, everyone's all on the same page that we're going. And then immediately after that, Bitcoin went on a 100x run from the lows. Okay, so this was huge. And anybody who recognized this, anybody who picked up on Wyckoff knew, oh, this is what I got it. I know what the whales are doing. They are entering. They're buying Bitcoin. So it doesn't matter if you believe in Bitcoin. It really didn't back then. And then on the flip side, old Wyckoff said, oh, well, when these guys want to leave, when they want to exit a market, they will often undergo distribution, which is, it's like someone's holding a tent up and they're like kind of doing some stuff with their other hand. Like the way I talked about it on stream before was, imagine like if when you were a little kid, you ever play the tent game where like the grown-ups would throw the tent and you like run around and you're playing under the tent, everyone's having fun. Like that's a fun memory. Like everyone remembers that if you did it. Well, like that's what the whales are doing. They're propping the tent up. Retail, you and me, you know, our parents, whatever, we're running around like idiots under the tent, just thinking, oh, we got it. This is great. This is the best time of our life. And then they kind of let go of the tent and they back away and the whole thing drifts down because they got out. The whales got out. This is how they exit. So yes, they helped push the price from where they entered all the way up, but once they exit, boy, they exit. And that's ball game. So if I drop this down to a lower time frame and I go back to 2017, to our peak of 2017, and if we compare this to the schematic number 2, we have a trade range formed, a little sign of weakness, followed by an upthrust, a break to the upside to new all-time highs, then a fallback, and an inability to reclaim any highs. So let's go back and look at what actually played out. All right, big sign of weakness, upthrust, which is a break above the trade range. Trade range was identified by all this market activity right here, but we broke above it. It's fine. Newt, and then a slow drift, and an inability to break above this level. So these tests and retests, these are key to the whole Wyckoff theory. This is how we know what is real, what's fake, what's going on. And then as we fell down, as price fell down, anybody who knew to look for this knew that it was going to get nasty. And so this is how we, who have been watching Bitcoin undergoing Wyckoff distribution for the last 100 days, we were able to predict and say, wow, so if this is actually, if what we're seeing here is an UTAD, which means up thrust after distribution at the all-time high, up thrust after distribution, followed by a breakdown, an LPSY, which means last point of supply. It's essentially the market's like final death gasp before everything just craters. And so you could see this was exactly what happened. It was like, please God, please let us go to new highs. I need new highs. Nuke. Okay. So all that activity took place as we fell out of the trade range. Last stream, we talked about, well, what happened the last time we broke down? We can actually measure it. And the fall down and out of the trade range over about a couple days period was like around 30%, call it 30%. But the only people who bought these things, the only people who were able to buy Bitcoin because the exchanges went so haywire were people who had their bids in, or perhaps bots that were working, or maybe like slamming the buy button until they finally got filled. But many exchanges were completely down. So that kind of brings us up to where we are today. Any questions on what we've done so far? I'm just some jackass. I am a nobody. Just doing my best.